Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 2nd, 2025. I am Nova.
I am Satoshi. The market definitely saw a broad pullback. Bitcoin dipped under, $107,000. Ether, Binance coin also down. Even the meme coins cooled off quite a bit. And something that jumped out at me from the report, retail interest seems to be fading. Google searches for Bitcoin are apparently the lowest since last October. So if retail's maybe taking a breather, what does that actually mean? What's holding things up?
That's exactly the right question. If retail steps back, you need something else, right? Some kind of floor. And what we are seeing is pretty robust institutional money flowing in, like $102 million in net daily inflows for spot crypto ETFs just on Monday.
Wow.
And that's part of over $2.2 billion in Bitcoin ETF volume just last week alone. This isn't just noise. It really points to stronger, maybe stickier, long-term institutional demand. Even while short-term traders get a bit cautious, it's a different kind of signal.
Right. And this is where I think it's really interesting, connecting that to regulation. On one side, you have these, pretty big regulatory steps happening. The US SEC is looking to streamline crypto ETF approvals. They've got this proposed S1 rule, the standard form, and a 75-day review timeline. Plus, they actually approved the conversion of Grayscale's big Bitcoin trust, GBTC, into a spot Bitcoin ETF. That feels huge. But, hasn't regulation always felt a bit slow? What makes this feel different?
Yeah, I think connecting it to the bigger picture is key here. These aren't just small tweaks. They're pretty strong signals that the market's maturing. They're basically opening up clearer, more regulated paths for traditional investors.
Okay.
And think about this too. Grayscale's digital large cap fund, it holds like 5 major cryptos. That just converted into the first multi-asset spot crypto ETF.
Oh, interesting. Multi-asset.
Exactly. And then over in Europe, you have Bybit.eu launching. It's the first fully MiCA-compliant exchange licensed in Vienna and passported across nearly 30 countries. These are like foundational building blocks for institutions to get more comfortable and involved. Provides those familiar structures they need.
Got it. There's always a but, isn't there? The flip side seems to be the macro environment. That's creating some headwinds. Fed Chair Jerome Powell is sticking to that wait-and-see approach on interest rates. Still talking higher for longer, potentially because of tariff risks. And the U.S. job market is still, surprisingly strong. Job openings jumped quite a bit in May, up to nearly 7.8 million, Gerald.
So for someone just watching crypto, how do Fed statements and job numbers actually, impact things?
Well, it basically tightens the screws financially. When you have strong economic data and a cautious Fed, Treasury yields tend to rise.
Right.
And higher yields on safer assets, like Treasuries, make riskier things, including crypto, look less attractive in comparison. Capital might flow out. It means liquidity, the amount of money sloshing around, might stay tight. And historically, that tends to mean softer demand for crypto. It's kind of basic economics affecting all risk assets. Okay, that makes sense. And amidst all this big picture stuff, individual coins still have their own stories, like XRP, right? There's this huge transfer, 25.5 million XRP moving to a Coinbase wallet. Usually that signals someone's about to sell.
Typically a bearish sign.
But instead, XRP actually rallied like 5% intraday. So that fueled all this talk about a potential spot XRP ETF. Some analysts are now saying there's, a 95% chance of approval this year? That seems incredibly high.
Yeah, it's a bit of a head-scratcher, but shows how sentiment can just pivot, maybe on speculation about institutional moves or ETF news. It's not always straightforward. So pulling it all together, you're really navigating this tug-of-war situation. On one hand, you've got genuinely significant regulatory progress and that steady institutional interest building a stronger foundation. That's the long game. But on the other hand, the immediate picture, the macro environment with the Fed holding firm and strong economic data, that's putting pressure on risk assets right now.
Definitely sounds like a time for, careful risk management. Watching those key support levels, keeping an eye on the broader economic signals seems crucial. So for you, the listener, maybe here's a final thought to chew on. We see these institutional doors creaking open, global regulations starting to take real shape. Despite the day-to-day price swings, are we actually watching crypto make that transition from, niche speculation to a recognized, legitimate asset class? And if so, what do you think that shift really means for its future, for your portfolio, for the wider financial world? Something to think about.
Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.